Aloha, everyone. Welcome to Java. We're going to have a little chat and get everybody ready for the markets this morning. It is Wednesday, September 6th, 2023. There's a ton going on as normal. So, first thing we're going to start off with that I would like to talk about is the risk. Very elevated, still very volatile. Yesterday was a very volatile day. Markets were kind of heading down, and then we had a Fed president come out and speak, reversed the markets for a bit, and it kind of chopped around. So we can expect more of that today. Doesn't really matter what's going on with the economy, but more of what they say in the language. We're going to talk a little bit more about that. So, looking at a favorite risk indicator, indicating we're still in high risk area. We're also looking at the elements of it, which is the relative strength of the dollar, very high right now. And we've got the 10-year yield also high. So these tend to put pressure on stock market prices. The 10-year yield got very close to that 4.3 level again, still at 4.25. We'll watch what that does today. We are watching also the volatility index is up. Gold under a little pressure, and oil is still high and will continue, I believe so, because Saudi has reiterated, along with Russia now, that they would restrict the oil supplies. That's going to affect most things, and we're actually going to talk quite a bit about that because it's huge news. So, moving on to our calendar, really not too much. We're going over the Fed's Beige Book and PMI numbers. And why do I say this doesn't matter so much? Because it's more in the language they're using now and the news they're putting out. It is psychological operations, and they're more managing the markets now with who they have out and talk. So they've got Waller saying that central banks can proceed carefully on rates, leaving the door open. I think they're going to hike 1/4 point, very likely September. We'll see what happens, but I'll also back that up and why I think that. And people, I'm in the minority by saying this. Most of the banks are saying there's only a 15% chance. So I very likely could be wrong, but I'll back this up with what I'm about to say. So the Fed says they're set to double their economic growth forecast after strong US data. They're saying we've got a strong economy. They're also suggesting the ECB should continue to raise rates as long as needed. So they're keeping them in lockstep because they must also raise, likely September, at a 1/4 interest rate, so it doesn't blow out either one of the currency or the trade issues. So they've really got to manage these, and these are also going to play in with some oil prices. So I'm going to surprise you today. We have got, I normally speak about Western banks, but the Bank of Russia. So now they're going to meet their currency demand. Everybody's talking about how they're in free fall. They have Eurobond coming due and they're able to make this. They are also converting foreign currencies much more rapidly than people had expected. So Russia is economically much stronger than we're being led to believe in the West. Okay? So want to go on further with this, what the debt ceiling battle means for your money. So this seems unrelated, but inflationary, completely inflationary. They are also putting out more money towards more shots. We know that they've already approved that. And the Secretary Blinken made a surprise visit to Kiev. And basically, this morning, he is promising more money towards the Ukraine war in the numbers of billions. So that also is tremendously inflationary, which the Fed will have to raise rates in order to contain, at least according to them. Okay, oil, part of our big story. So they're talking about rising oil prices will, of course, fuel inflation, because if something isn't made with oil, it's transported with oil. Almost everything that we get is affected somehow by this price. Okay. Second story, key global oil price zoomed past $90 a barrel. And as we said, could have a bit of a correction, but it will continue to increase with these restrictions. And so I just want to make a small point here. There's a lot of headlines that come out, and sometimes you'll see the truth is kind of hidden in between them, or when you get the right stories and compare them together. And this is kind of some of the research that I do. So we got Russia and Turkey are planning long-term energy cooperation. Well, doesn't sound like much because Turkey, of course, doesn't produce that much. And we kind of look at this as a smaller deal until you pair it with the proper story that came out of Ukraine attacking key gas pipelines to Turkey. So when you put those together, these are main entry points that they will be able to sell their gas and their oil, and the countries that it's going to makes it an even more important story. And it's basically going through BRICS. So we're going to keep an eye on this because this will affect their trade routes in a tremendous way. And this is also a big reason why they're restricting the oil supply in the first place. Okay, for the US economy, going back to this, phone and internet providers disallowing payments by credit cards. Okay, this is because they know now that credit cards, the paired story with this one, the defaults are beginning to soar and they know they're not going to be made whole. So they're refusing payments, and this is kind of stage 2 in this credit crumbling. So we'll keep an eye on that. We've got a couple of smaller stories wanted to put in that I think really show the more of a true picture of the economy. So Roku says it's going to fire 10% of its labor. The stock goes up because they're cutting costs, but that's more unemployment. We've got Southwest Airlines. Yesterday, the airlines were large in the news for a couple of reasons, but their stock dropped because leisure bookings were on the low end of expectations. So this is another key, in my mind, discretionary spending that has been bolstered by the post-cough pandemic travel. With this, we've also got Alaska Air revising their guidance to reflect the spike in fuel costs in recent weeks, because obviously for travel, jet fuel, it will affect their cost to have the price of oil skyrocketing. Okay, so with this, I would like to move on a bit to our news in the European Union. The US is setting up nuclear weapons, or at least trying to, in Britain. And so, of course, there are demonstrations going on there because they don't want them to do this, the protesters. And this is kind of in an answer to Putin starting to bring out his nuclear weapons and the talks that are going on of North Korea bolstering them with more. So things are escalating a bit. Just something to keep an eye on that is not really being covered in the US. On the trade side, we've got one of the largest industries for Germany is a car industry, and they're issuing energy price warnings that this is basically cutting their production. So if they cut their production, this is going to cut, of course, labor for them, more unemployment, and less in their GDP. So this could really snowball rapidly. With this, it's time to ask if there's anything that you would like to hear about, or I would like to know your opinion on any of the content that I've covered in here. And if you like any of it, please consider hitting that like. It means a lot to me and would help me out tremendously. I appreciate that. And I've got one last lava update I thought was an interesting kind of a mix. So KKR's McVeigh boosts economic outlook, kind of going against what I think, but he's recommending investors buy real assets. And so with that, I would like to take the opportunity to point out that real assets are silver or gold bullion, coins that you can hold in your hand, anything that you have in your control. This could include ammunition, food, non-perishable food items, or anything that you could have that are real assets to have around you, that in the event of something you could use or trade. With that, I wish you all a great trading day, or just a wonderful day in general. And as always, my friends, until I see you again, stay free.